Well, it turns out that Donald Trump thinks that Musk's quasi apology was really nice that he did that. Yeah, I think so too. But the stock is not necessarily moving on the news that the bromance may be reignited. I wouldn't anticipate it ever gets back to the levels it was, but you can never tell. Friends have spats and then friends get friendly again. We'll see what happens. But in the meantime, I can't help thinking that the market is exhausted. Maybe they're waiting for another shoe to drop. I can't figure out what is keeping the big money on the sidelines. Maybe there's concerns that the big, beautiful bill won't pass. Maybe that's what they're waiting for. I'm not sure. Maybe they think the Fed is going to lower rates. I don't think so. Not next month. I mean, not next week. Maybe in September. Wait a minute. Let's see. It's June and then August. Yeah, August. Maybe in August. Inflation numbers couldn't have come in any better. We'll look at those in detail in a few minutes. I mean, really detail. I want you to really understand how good these numbers were. So, sure, there are worries about a nationwide protest movement that will be culminating this Saturday, the 14th, which is all kinds of things. It's Trump's birthday, it's my wife's birthday, it's Flag Day, it's the 250th anniversary of the U.S. Army coming into existence. There's all kinds of things happening on the 14th. But there's probably going to be some protests and some rioting and some looting and some bad behavior by some bad folks across the country. And Trump has promised to eradicate it, to eliminate it, to come down hard. We'll see what happens during the course of the week as we get closer and closer to that. So that could be keeping people a little bit on the sidelines. But we have the China thing really coming out well this morning. I don't know. But seriously, Tesla's not even back to pre-POTUS fight levels. The dust up with Elon sent it from almost 360 all the way down to 275. We're only back to 330 and change. That's a very good run up. And for those who bought at 275, I'm sure they're thrilled. But why aren't we back to 360 at least? Well, okay. Here's what could move Tesla in the next 19 days. What I believe anyway. So we've got the at least one vehicle putting around day and night with passenger apparently in the car. That has moved us into this 330 plus range. Well, next would be more sightings of more test vehicles. So we'll have lots of sightings of that one, but it'd be nice if we had, 10 or 15 or a bunch of vehicles identified as being in test. Any reporting of those vehicles, including videos, testimonials, data, would be good. That would help the market, I think. Now, it's possible that during this 12, 11 days until the 22nd, there may be celebrities, there might be influencers, there might be who knows who might be riding in these vehicles, who might be reporting on their rides. And so that's kind of what I might expect to see during these 12, 11 days that are remaining, but maybe not. Maybe this is 100% employees and friends of the firm or whatever that are not going to be doing any reporting. It's just 100% test to make sure everything's great before they start letting other folks in the cars. I do know that there's going to be some, they've already talked about the fact that there will be some invitees that'll be first to ride, but is that going to be on the 22nd or is that going to happen before the 22nd? That's a little bit unknown at this point. Now then, I think that there will be a little help to the market, maybe not a giant jump, but some help to the market if the paid rides do start on the 22nd as planned. And if there's any significant holdback, if they don't go on the 22nd, if there's we're going to do it in another 2 weeks, that can hurt the stock, obviously. I would expect as soon as there is paid rides or influencer rides or celebrity rides, there will be hundreds of videos and testimonials are rising out of these rides. Those are going to be extremely helpful. And then, of course, a lack of any accidents or issues. And in kind of in the same vein, it'd be nice if Tesla gives us some stats maybe weekly. It's probably not going to happen, but it'd be nice to get some stats. Now, on the negative side of possible catalysts over the next several weeks would be the coming of the numbers on July 2nd, which are not expected to be that great. And then non-robotaxi related would be the Model Q is supposed to be introduced. We're supposed to get the reveal within that same time frame between now and the end of the month. So that's a lot of stuff. And, I continue, of course, to have my price target. I have not bent from it. I've pushed back a couple of times. I think fairly, and thank you to all of you out there who agreed that it was fair. Tesla Chan this morning says, good news. Tesla succeeded in achieving a full 40 gigawatt hours of capacity at Megafactory in Lathrop. His calculation is as follows. Tesla announced its 10,000th Megapack on November 5th. And they announced their 15,000th Megapack on June 11th of this year. Well, the 5,000 Megapacks that were produced over that 7 months indicates that they were producing very, very close to the full 20 gigawatt hours or the full 10,000 Megapacks per year. Holmar's blog says this, the average American spends $12,297 a year on car ownership. Add in parking and tolls and car washes, and they can rise to about $14,000 to $17,000 a year. It's like having to buy a new iPhone every month. He says, wouldn't it be great if you didn't have to pay for all of that? That's from the AAA. So that would be good. Yeah. So that my numbers yesterday were very, very low. I said I was thinking there was at least $500 a month just for the basics, like the car payments, whether that's a lease or a buy, combined with any repairs, the car washes, gasoline, etc. I thought $500 to $700 was probably the number. No, it's more like $1,000 a month. So switching over to a robotaxi as your main method of transportation would probably be wise when the time comes. All right, this is Randy Kirk. Please hit like and subscribe and notify. It will be tonight. What will it be? Okay, we're going to have a special treat for you tonight. We're going to have Nicholas Gibbs back. We still don't have Jeff, as far as I know. We don't have Jeff back yet. So Nicholas Gibbs will be coming in tonight for Jeff, and we'll have Brian White, because last night I ran late and we didn't do the Brian White video that I already had in the can. So hit notify so you don't miss either of those. Hitting one other thing you could hit joining here on YouTube. You could join the channel, a couple of bucks a month or $1. I forget what I put up there. It's less than Patreon. And then Patreon starts at $3 a month. You go 3, 5, or 10. You could join Patreon. Consumer prices rose less than expected. Can I say that again? Consumer prices rose less than expected in May. Less than expected. As President Donald Trump's tariffs have yet to show significant impact on inflation. This is according to the Bureau of Labor Statistics. The Consumer Price Index, a broad-based measure of goods and services across the sprawling U.S. economy, this is by way of CNBC's report, increased 0.1% for the month, putting the annual inflation rate at 2.4, which was the same as last month. The 2.4 was what was expected, but they had expected 0.2% month over month, and it only came in at 0.1% month over month. Now that's the headline number, which includes food and energy. Then you take those babies out of there, you get to the core CPI, and that came in also at 0.1% and 2.8% for the year, but that had been expected to be at 0.3% month over month, not 0.1%, and it was expected to be 2.9% year over year, so that was a beat also at 2.8. So can you understand why I'm a little shocked that the markets aren't reacting more favorably, that the bonds aren't dropping more quickly, that the Dow and S&P aren't up more than they are? Federal Reserve officials consider core a better measure, etc. The all items annual rate marked a 0.1% step up from April, while the core was the same. Continued weakness in energy prices helped offset some of the increases in a handful of other key items, were expected to show tariff-related jumps, but they didn't. Energy slipped 1% for the month. Well, you know what I'm going to do? I'm going to skip. Shelter prices, I'm going to skip because you know what? Here we go. Let's see. Today's below forecast inflation print is reassuring, but only to an extent, said Seema Shah, Chief Global Strategist at Principal Asset Management. He says tariff-driven price increases may not feed through to the CPI data for a few more months, so it is far too premature to assume that the price shock will not materialize. I'm going to say it again, and I'll say a little bit more about this in a minute. The most that it can impact CPI is 0.8. That's tops, and it's probably more like 0.4 for the year. So no, it's not going to show up in the numbers, guys. Mark my words, bookmark it. Come on, test me on this. Stock market futures turned positive after the report, but not positive enough. Echoing Trump, Vice President J.D. Vance in a post on X called on the Fed, cut interest rates. The president has been saying this for a while, but it's even more clear the refusal by the Fed to cut rates is monetary malpractice, according to Vance. Well, the trade tensions are persisting, but the BLS report comes with the administration continuing its efforts to negotiate trade deals. In his April 2nd Liberation Day announcement, Trump slapped 10% universal duties on U.S. imports and a host of other so-called reciprocal tariffs on countries he said have been using unfair trading practices. Most recently, White House officials have met with Chinese leaders. Well, no, they most recently got an agreement with Chinese leaders. We'll talk about that in a second. Other nations hit with reciprocal duties have until July to strike a deal. White House officials insist that tariffs will not cause runaway inflation. No, because here's how you do it. The total amount of imports to the United States is 14% of GDP. The expected amount of the overall maximum amount that could pass through to consumers is 15%. 14 times 15% is 0.8%. But I don't think half of that will come through to the consumers. So now you're at 0.4%. The benign May reading on inflation suggests that tariffs aren't having a large immediate impact because companies have been using existing inventories or slowly adjusting prices, said Alexandra Wilson Elizondo, Global CIO of Multi-Asset Solutions at Goldman Sachs. While we might see some price increases on goods later, service prices are expected to remain stable because they don't have hardly any import amounts that are impacting their numbers. Market prices indicate the Fed is unlikely to consider further interest rate cuts until at least September. That's what everybody's expecting. And Trump, of course, has been urging the opposite. Now, this is from AJ. It's a very good analysis, as usual, from AJ on the inflation numbers. He says, removing the stale shelter data, which if you listened last night, you know that Nicholas Gibbs and I were talking about the housing data, which at this point is showing that we're probably going to be under 3% this year in terms of increases. He says you can see the CPI has already decreased to 1.5 if you take that out, but implies a sequential increase of 0.1% from April's 1.4. However, it's still significantly lower than, so that's still significantly lower than the 2% target. The items with by the far the biggest weighting comprise the shelter-related items. These items are based on stale, at least 6 months old survey data, and we know from current data that this is bound to reduce further. The next highest weighted items are new vehicles, household furnishing, supplies, and gas remain very low, under 1%, are deeply deflationary. Gas, negative 12%. Gas at negative 12, last month 11.8, represents the primary deflationary driver, given its 3% weighting on the overall CPI. That's what I always point out is the oil prices, which are super important to inflation. Oil prices affect everything in the inflation basket, as I've said month after month. Gas prices, obviously, most directly, because everything moves, all your products, all your foods, all your food stuff, everything that's going to the mass market, everything that's going to the, fast food stores and the restaurants, everything has a gas inflation tax. If in fact it's going up, and if those things are going down, then it costs that restaurant less to get those products into the store. Item number 6, he says, limited service meals and snacks, a slight increase from 3.4 to 3.5. The weighting is almost 3%, but that's still an increase, so that needs to come down. Item number 7, apparel increasingly deflationary. dropping from negative 0.7 to negative 0.9. And that has a weighting of 2.5%. Item number 9, electricity. Inflation pressure increased from 3.6 to 4.5. He says this is the one that needs to be watched. The AI boom likely will drive this up further. At a relatively high weighting of 2.39, it ranks among the medium larger items to pay attention to. On the other side of the coin, I'm not sure. I'm not sure the electricity is going to go up that much. We'll see. Maybe next year. I don't necessarily know that it goes up this year. Number 9, item 10, used cars and trucks. They increased from 1.5% to 1.8%, but remain under the 2% level. Item 22, piped gas remains exceptionally high at over 15%. And this is not driven by monetary policy. And then how about eggs? Eggs continue to create significant inflation pressure, even though most recent price developments imply significant price easing. In April, egg prices were up 49% year over year, but eased now in May to just 41%. This very high price increase, despite the small weighting, 0.20, still adds about 8 basis points. This egg price-induced inflation pressure should be significantly easing in June, July as more egg supply comes on. Now that the tariffs for China are all but finalized, the total imports from China, this is Randy now, the total imports from China are going to be out, I'm sorry, total imports from China are about 1.5% of GDP. The tariffs are going to increase by at the most 25%. Do the multiplication. That would be 0.4% impact on overall GDP from the China aspect of the tariffs, but it's going to be far less than that because not all of those are going to flow through. In fact, very little of that is going to flow through to the consumer. All right, so 20 minutes ago, I was unhappy with where we were in the markets. Let's see if my happiness has changed in one direction or the other. Look at this. We've got Tesla sitting at 330, up only $4 on the day. It has been up as much as, I think, 7 at one point. So yes, that's not, it just makes no sense to me. You've got the Dow Jones up 133. That's about where it's been at 43,000. NASDAQ up $21 points rather at 19,736. S&P up only 5.76 at 6,044. Definitely within 100 of all-time high. Percentage-wise, those would be Tesla up 1.33, NASDAQ up 0.11, Dow up 0.31%, and S&P up 0.1%. We've got all of the Magnificent Seven negative on the day, except for Microsoft, and Tesla, of course. Microsoft up a little bit, 0.59. You've got the Cathie Woods mixed, but mostly higher. Mostly higher, yeah. In fact, it's looking like pretty close to everything will be higher in a second, because you've only got 2 of them that are negative and they're going in the right direction. So the Cathie Woods and Tesla all going in the same direction. You would say, oh, the bonds must be operating at least going in the right direction. Let's see if the direction is right for the bonds, and they are down 4.2, which is better than it was when we first went on the air this morning. You're now at 4.432. It's horrible, stupid, ridiculous high, but it's coming down directionally, at least in the right. We're going the right way. Okay, oil up another $1.75, 66.73. Brent at 68.39, which is now $1.50, $1.60, almost $1.70 difference. So getting back closer to normal. Natural gas down 1.81 to 3.46, 3.47. So I think it's time for the president to use the bully pulpit on this oil situation. We don't want it to get any higher than this. Time to stop it. Mr. President, take my advice. Get out there and tell the oil guys to start pumping again. We've got gold. By the way, it'll probably happen now that we're kind of getting close to 70. We'll probably see a lot of this production come back on. Gold holds at 33.53, up $10. Silver finally coming down a bit, down 0.78% at 36.35. Remember, 38.5 is about all-time high. And copper down a full 1.76, dropping away from that $5 at $4.81. The dollar is a little bit down as inflation cools. But quite frankly, I'm looking at it, it looks mixed to me. We've got Bitcoin down 135 at 109,680, 109,676. Remember, this is very close to all-time highs, just over 110,000. And there you go. That's all there is, and there ain't no more. So what you definitely want to do is go back yesterday and take a look at Nicholas Gibbs and me talking last night, because that was that's a very, very, very good video. It's a classic. I mean, there's really a lot of meat in there. So if you didn't take a look at it all, I'll put that card up. Later today, Nicholas will be back, and I've got some amazingly interesting questions to ask Nicholas Gibbs, which I think you'll enjoy, and then Brian White at 7:45. Yeah, I think that's it. Like, subscribe, and all that stuff. Well, should we go back and just look at Tesla real quick? Just one last time, just before I say adieu. Tesla now up only 0.8. We've now dropped again, 328.69. I shouldn't have looked. It's been great talking to you.